everybody, good afternoon. This is Neil with Simpler Futures, and it is the end of your first week of January, Jan 6th. This is Friday, post-market kind of review update, and we have a new high for the year, of course, because we just got started. But year open 38.95, it's basically 3,900. Traded down to 38.20 and up to 39.20, so 100 point range. Which basically kind of fits. I mean, the year, the week was supposed to be plus or minus 50, and that is plus or minus 50. So it puts us still on this daily chart, as you can see, at the upper edge, but still in our range. We haven't left our range yet. That range started back on December the 16th, and we're at the upper edge of it, but we haven't left it yet. There is more than enough on the docket for next week to make a difference, and so be ready for that. Let's look. We got into next week. We got plus or minus 100. Wow. Okay, so that's bigger, and it should be, because it should be, because Tuesday we hear from Powell early, but pre-market, and then Thursday we get CPI. Both of those can be interesting, and everybody's got to make up their mind what you are looking for. If somebody were to ask my opinion, I certainly have one. It's going up, and it's going back up here to about 4,000. The upper edge of that would be 40.50, but certainly around 4,000. That's a bold statement, right? I mean, nobody knows it's actually going to go that direction. But I have to, have an opinion and a plan. And if up, then there. And okay, so if down, and I don't know that I would, but if down, then you'd be looking for two targets down here, 37.50 and 3,700, and it could, I guess, right? Certainly, that's what it would be looking for if it went that way. But I would be ready for it to leave this range in one direction or the other, but certainly ready for it to leave this range. I do have an opinion which way, but it's just that, right? And I'm starting to shop some trades for those objectives. I like low risk, large reward type trades like butterflies, and so I'm shopping those. Go look at the Go look at this SPX, this Jan 20 right here, and look at this. My goodness sakes, look at that at the 4,000 strike. 150, almost 4 on the put side, 170, almost 1 on the call side. Jan 20 AM SPX at 4,000. I wouldn't be looking for it to get through there. Certainly not. I don't know about necessarily pinning it, but not getting through there. So we'll talk early next week about what you can look at maybe doing up here. But there's some ideas for you, right? Some call flies up in this area. I wouldn't necessarily be trying to pin it directly on that, but somewhere up here, right? Certainly an idea. And let's look here real quick before we go. This looks, we had non-farm payroll this morning, of course, as you know, right? Payrolls were, it wasn't, I guess it was good enough that the market kind of liked it. The average hourly earnings, honestly, is what I think was attractive, because it was, lower than expected, and that's my opinion, at least. That's what, the market kind of really reacted to, because that would be bullish, right? Because the market could see that as, whoa, Fed, you can take your foot off the gas there a little bit, with average hourly earnings coming in light, right? And by the way, right? That means bad news is good. That's the takeaway. Bad news is good.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me